All right. So for my loyals, please give me a thumbs up if your audio is good. Honestly, I still haven't got over the shock of the audio crankiness over the last couple months or so. Can you please give me a thumbs up in the group here? This will actually be the first top chat that I've had on the Independent Investor channel. I've been doing some other thing, and somebody came on the group and said, "Hey man, you might want to check your drop down." So I did my first 30 live chats. I think they were, live chats. So that's why I was missing like 100 comments. So I'm actually going to thank you very much, Doug. I appreciate it. It's awesome to be with you guys tonight. Obviously, I've done some reflection. I don't know if we're going to make it another week. We will be at 10,000 subscribers right around the corner. So awesome. I never would have thought. I looked last year at this very time in November, and I had just hit my first 1,000 subscribers. So 10,000 people have come in and related with the message, and that's all I ever wanted to do. This honestly is probably my favorite hour or so of the week, where I get to come in and actually converse with folks from all different perspectives. Obviously, I have mine. I always try to give you some level of insight from my brain, which is extremely complex. Listen, I love finances and I love the stock market. I really do. I've got Doug that says, "How about all that red?" Actually, I've been focusing on really retooling my portfolio, and I'm going to give you guys the percentages of exactly where I'm at with my stock portfolio, with the SEP IRA, with the Trade First. I just got that all started this week. Got about $2,500 in there, so I'm excited about that. For you guys that have asked me for the affiliate link, honestly, a heartfelt thank you for you guys. I don't know if I'll be provided any type of monetary compensation. We will see. I've been trying to email everybody that hit me up because I thought First Trade was being a little bit stingy with me. I called them last night and they said that there was so many referrals that had come on, they couldn't give me an answer. They had to go back and have the manager look at how many referrals had gone back. So I'm waiting for that call back. I think there was a ton of people that took that solution and ran with it. So I really want to thank you guys. You know, for the first couple years of the channel, I've been offering Merrill Edge as a solution. And I know for a lot of people, that $7 entry fee is a big faux pas. They just don't like it. They don't want to pay the fee. And why should you? If there's a service out there that provides you entry to the stock market free of charge, which is right in line with what I advocate for, then why not take it? And right now, Webull, M1, and First Trade are the only three that I know about. Now, there's incentive levels that you can meet, like me. I'm not turning away from Merrill Edge. I'm rooted in with some other programs that they have that give me good incentive, like the credit card, the Power Rewards program that they have is pretty good. And that doesn't mean that I didn't start the First Trade account. I started a brokerage account with them. I've been aggressively pursuing, exploring that platform, and I'm excited. It's an awesome platform. It'll give you guys everything that I always talk about with regard to watch lists, with regard to access to analytics. I've got one of the guys in the group here who says, "I'd like to read 10K filings." I don't do that. I definitely look at balance sheets and income statements. That's really where I think the root of investing comes from. And then definitely with the technical analysis, and then more fundamental analysis when you're looking at, a stock that can just make sense. But don't get too aggressive on thinking that you can outsmart the stock market. Even some of the smartest analysts just screw up and end up buying a Valiant Pharmaceuticals and losing $4 billion. So it can happen to the best of it. I just look at and look at the stock market in a different way, in that sometimes the most simple approaches are the very best approaches. And there are studies out there that are just absolutely alarming to show that the more passive you are on your account, the better off you'll be. And there's nobody more suited for passive investing than a new investor out there. So this is going to be the first live chat that I've ever had on the Independent Investor channel. Now I'm seeing that I was missing so many comments. It's nice to actually see everybody here. So I'm pretty aggressive on getting to the comments. And that's exactly what I'm going to do. So I've already shot my 10,000 subscriber video, at least part of it. But without further ado, I'd like to thank everybody in this particular community. This is kind of a niche thing where we get on here. I try to provide as much transparency as I can about my thoughts on the stock market, and in turn get your guys' thoughts on the stock market. And I just think it's cool, man. I think it's cool to have this high level and frequency of access to somebody who's experienced 25 years in the stock market. And I'm willing to give it to you guys free of charge, because I love the reciprocation. I love hearing everybody's opinion about it, and I just love talking about it too. But if we can take somebody who's a new investor in the stock market and get them excited about entering into the stock market, not a whole hell of a lot to be excited about this week. Obviously, the volatility is just absolutely crazy. It's just been crazy. I've been swinging some thousands of dollars every day. Today was a down day of around $3,000, but I'm actually more excited about the retooling that I've done. You guys noticed the couple videos that I released this week, how to achieve your first $10,000. That was a very successful video in my mind. I think anytime I get over 1,000 views, I think that's pretty cool. And the second one was also really cool about spider ETFs. Something that I've been kind of down on the channel, because I think that if you try to pick and choose, and you guys know that I grabbed a hold of utilities when it was going the opposite direction of the S&P 500. Now I couldn't be more proud to own the utilities ETF. So I'm going to go ahead and get to some of these questions. I've got a ton of stuff to talk about tonight. You guys are in for a super cool treat, man. I mean, if you were going to a financial seminar or something, you'd probably have to pay thousands of dollars for this information. But that's just kind of where I come in. I'm trying to provide an avenue for folks who just need to talk normally with somebody who's an everyday, hardworking person, a genuine person who really just is into teaching about finances. I do have Brent from the Financial Investor in the group. So don't hesitate to reach out to Brent. He's always very, very active in helping me answer some of these questions. So not to be redundant, but I do want to get to some of these. So if he's already addressed them, please just address your questions to Brent, certainly. But I've got In Munch to start it off, man. Can't wait. Thanks for all you do. I didn't know where this channel was going to go 2 years ago, and I couldn't be happier with the growth. I couldn't be happier with, honestly, the genuine nature of how we're growing the channel through referral. And you guys know my position. I honestly think that YouTube could probably do away with some of the financial channels right now. And I thought it was like that when I started. I thought it was crazy. I mean, always try to offer a little bit of a niche, I don't think I could do YouTube if I just got on here and just talked about boring old stocks and money and finances. I just don't think I could do that. I wouldn't have the fortitude to think that I'm not wasting your time by coming on here and just offering mundane information that you can find, okay? And the information that I talk about on this channel and the niche, for anybody who's new to the channel, the value is right here, okay? On a continuum of 100%, if you go in and you invest with the financial planners over 40 years, a 3% fee, which is the industry average, this is coming straight from Tony Robbins, is going to cost you 60% of your money. You're only going to realize back 40% of your money. So when you talk about, yeah, I'm seeing a lot of red on the street right now, obviously there's some red in the portfolio, but so many people want to just focus in on these dips right here. And the dips really aren't what matters. Furthermore, what doesn't matter is these tops in the market. Now, this can be relative over a number of different years in the stock market. And so many YouTube channels want to survive on just talking about these dips. And I was a little bit hard on one of the channels this week about just coming out with the news of the day. And I just don't see the value in doing that. If I wanted to get on here and entertain you, I wouldn't have a YouTube channel. okay, because I'm just not a very entertaining guy, okay? But most of the YouTube channels are just talking about this. Hey, the stock market's down 800 points today. Oh my God, Apple's fallen through the floor, you know, and you're not putting your attention on where it needs to be. And where it needs to be is really on this best fit line here. And over time, this best fit line is really what you're looking at to get your average rate of return per year. So it doesn't really do you a whole lot of good to focus on when the stock market is negative. Now, there are some people in the group here, like Obstinate One says, that's a bipolar stock market. It's really got to be petrifying for a new investor to look at it and go, I don't know if I can survive in this. Can I survive in this stock market? And I would give you this piece of advice. If you're out there and you're 20 years old and you're looking at this stock market and you're seeing it go down, 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 and let's say you've saved up $1,000, okay? I really think you owe it to yourself to take 20% of that money, okay? And this will give you guys an insight on, I addressed this last week, and I just feel like this is such a good representation. If the outer circle is your cash amount and the inner circle is the percentage of exposure to the stock market, I want you to just to think about it that way. And you have the choice to define your level of exposure to the stock market. And I would charge each and every one of you to look at it and say, gosh, Ryan's saying, I don't have to take my entire $1,000. I'm going to put $800 away, continue to build upon it. And I'm going to take $200 and I'm going to start my account, my Roth IRA account, and I'm going to get invested no matter what the stock market is doing at any given time. That is the prudent advice that somebody needs to be providing to anybody out there looking to get involved in the stock market. It's very, very important. Now, it depends on your risk tolerance. If you're 20 years old, you could certainly afford to bump that up and make sure that this is up around 50%. You could do that, all right? But it's the relativity piece. It's the perspective on approaching the stock market, because most people don't know, and they'll take their entire $1,000 and they'll invest it in the stock market, and they'll do this. And they'll tune into YouTube channels to try to get some validation, whether or not they did the right thing, you know? And I'm here to tell you, on a scale of 0 to 100%, define what it is on a percentage basis, what your level of exposure to the stock market is going to be from a starter position, and go crazy. If you think you can afford 50%, go with 25. Always err on the side of a defensive position, all right? Because come January, February, if the market continues to go up, you'll be like, wow, awesome. I started my account. Ryan said I could kind of scale into the market, and that's what I did. I'm glad I did. But if the market continues to correct on us really, really heavy, I'm going to have that cash on the side, and I would have entered the stock market from more of a defensive posture. And that's how new stock investors need to look at tackling this beast, all right? There's people who are analysts. They've been doing the stock market for 30, 40 years, and they don't understand this. They think that they can just look at it year over year and beat it, and they don't end up doing that. Hedge funds right now are losing their behinds right now. They can't do it. So how is a regular person who doesn't have any knowledge of the stock market supposed to get in and succeed in the stock market? It's to approach it from a position of strength, okay? And not overexpose yourself to the stock market. Give yourself a chance. If you have to set it up at $10 per month to start that dollar cost average program, do that. I just offered you guys a first trade solution that offers you free trades. You can buy as much stock as you want at $10. It doesn't even matter. Pretty cool stuff, man. Contribute to the account to get it up, make those stock buys when you can, you know, enter into passive ETFs to start. I did make my first purchase inside my first trade account. I just bought the Vanguard small cap ETF. I've been wanting to own that for a long, long time. And that's going to be an attempt to beef up my small cap exposure in my portfolio. So I'm actually going to get to these questions, man. There's a ton in the group. Again, welcome. We're here on a Friday night. And I just want to thank each and every one of you guys. I will probably try to go live the night that I hit 10,000 subscribers. So kind of keep your eyes open for that. And it's going to be all about you guys. I'm kind of a funny guy. I don't like praise. I don't like a lot of attention. So this 10,000 subscriber thing, I'm very, very proud of it. I really am. But if you guys want to know the God's honest truth, I'm actually more proud of the fact that there's a lot of people out there deploying the information and becoming a self-directed investor. That's really what I'm more proud of. 10,000 is just an arbitrary number to me. And a lot of people tell me that's a great milestone, and it is. But honestly, I have my own personal values on what I want to get out of this channel and what I want to continue to bring to viewers that seek out the message of the Independent Investor channel, man. So I got Michael Raver. That's awesome. Full disclosure, I'd like to start to cover how to and analyze 10Qs and 10Ks. So I've kind of addressed this a little bit. And you know, the New York Stock Exchange, the NYSE, if you guys just Google NYSE, you're going to get access to all of the income statements and balance sheets. And those are the two documents that if you were interested in doing a little bit of a technical side review of a company's financials, the New York Stock Exchange has them all. So it's the best free source for information. Now, on your guys' brokerage accounts, you're going to see analyst recommendations. First Trade has the heat maps on there, which are really good, which kind of extrapolate some of that data from the income statements, and they put it into easier terms to understand. But if you're really interested in learning that stuff yourself, I do encourage you to look at that stuff. It can be a little bit overwhelming when you first start. So don't frustrate yourself. It's not a condition of success in the stock market, I contend. I very rarely look at that stuff. So just keep it relative, okay, when you're looking at that kind of stuff. But it's cool, you know. I'm very interested in the stock market as well. I'm not so interested in that type of thing. I'm interested in strategic buying. I'm interested in channeling stock. Certainly, I'm into value investing and passive investing. I'm kind of into really trying to do it all and looking at portfolio building from a holistic perspective. And I've succeeded quite nicely at it. So I'll be covering my portfolio percentages and just kind of letting you know where I'm at here in the stock market. Everybody's saying it's going to hell in a handbasket. I'm really not seeing it. I'm really not seeing that big of a change in my portfolio, but I don't know, maybe it's my risk tolerance. I just really don't think it's that big of a deal, especially when the underlying economy is actually quite good. There's just some geopolitical headwind going on right now. So Ryan, what is your thoughts on General Electric still holding firm at $5? I'm holding firm no matter what the stock does. I don't really care down here in the trenches. I've added some position here at $7. If that's your question, I've got about 300 shares of the stock right now. It'll end up being a doubler. So I'm not worried about General Electric one bit. It's extremely oversold. I've seen this a million times. The stock market is extremely unforgiving when a stock does this. I think everything that GE is getting right now, they deserved. They did. And I wish I had access to that information, because I can tell you guys that General Electric, when it was at $42, which I remember, everybody was talking about how wonderful of a company. And at that time, all this stuff that has now been uncovered about their accounting scandals, you know, about their mismanagement of funds, just waste here and there around every department. All that stuff has been, it's visible. So are things not better now with General Electric at $7 as they were at $42? And I would make the argument that it is. It's just that at $42, they were doing a very good job of hiding that from people. I think it's fine right here. Had I gone back, would I have bought the stock and took it into a 42% downturn? No, I wouldn't. But that's the reason why I only expose a couple percent of my portfolio to any one given stock. It doesn't hurt my overall portfolio that much. It gives me the luxury of just holding the shares. Because if I look at just the dollar value right now, which is really not that important to me, I'm more interested in where it's going to go from here. Do I think it's going to go to $1 or do I think it's going to go to $14? That's up for debate. But I actually think the stock is going to eventually double from here, and maybe as early as next year. Let this guy have a chance to work this at the helm a little bit and see how good he can bring GE back. I think it's going to come back. I think it's got a good backlog of business. I think they've got a really good network of support across the industrial landscape. People want their product, and I think they'll be just fine. We're not going to lose a $60 billion company overnight, guys. And here's your chance to pick it up at $7. So I know everybody wants to talk about Tesla right now. Tesla's the darling of the stock market right now, and I refuse to touch it. It's a great question. Thank you, Matt. Appreciate it, man. Very cool. Are you still planning on adding shares? I think I've been adding shares here the whole time, just little bits at a time. I'm not getting crazy, just scaling into the stock, and eventually it'll pay off. So I got Michael Raver. I like General Electric. Buying it for 5 or 8, in my opinion, is a moot point. It is. If you're buying it for the long term, it's a good company that needs a little time to fix their debt problem and then refocus their efforts. That's exactly correct. I've been dollar cost averaging in since $10 a share. This will be about 1% position in my portfolio, with hopes that in the next 2 to 3 years, they'll bring back their dividend, or at least a growth play. Exactly. I think both of those things will happen. I don't think they're going to bring back the dividend. I think at maybe the latter 3 years, they'll bring back the dividend, but I think they're going to make sure stuff is off and rolling. And they'll run the stock up into $20, $30, $40 by the time they bring the dividend back. So got a killer group in here tonight, guys. I was hoping I might break 100 people in the group. I've got 87 people here, man. I just am so excited about the growth of the channel. I would just encourage you guys, the only, I guess, payment that I ask for, I know in 230 videos, I talk all the time about doing this channel for free. And it's going to continue to do that. You guys know I run ads on the videos. I get a few pennies, for running the ads on you can't survive on just ad revenue. You've got to do something like Scribner does. He scales his channel very, very well. But you guys have to understand, he does this for a living. I do not. And I'm going to run the channel the way I want to. And I know a lot of people do appreciate that. Very cool. I really think that the first trade opportunity was received well by the community. I really hope you guys understood why it was that I did that. It was such a seamless solution to the channel, and I got tired. I filter a lot of information that comes in through the channel, and there's been so many people that just had a heartache with those trading fees, enough to go with Robinhood, which doesn't offer the retirement accounts. The top 3, M1, Webull, and First Trade, they all offer retirement accounts. So what a great opportunity for a new investor to open up a full service brokerage account and trade for free. Man, I would have killed for this information when I was just getting started in investing. Just amazing, the opportunities. And that's why I insist all the time, if you're new to getting interested in the stock market, you really just don't have any excuse other than to pay attention. Because the earlier you get started in this stuff, and even some of my elderly crowd as well, man, some of the folks in their 40s, 50s, 60s that tune into the channel, man, you guys are finding out that it's actually a lot of fun to trade stock on a relative basis. Get some good holdings in there, set them up for dividend reinvestment, and become an investor as well. So certainly don't discourage anybody from getting involved in the stock market. But, there's some videos floating around YouTube right now talking about how bad millennials are with money. I just don't buy into any of that cliche crap. I don't. I think millennials out there are super smart, technologically savvy. I probably had a millennial fix my live chat tonight, honestly, by saying, hey, you might want to check this drop down, you idiot. But, you know, I think for the young folks out there, the sky is the limit. I really do, with your opportunity and access to the stock market in eliminating fees in your investment accounts. It's huge, man. It really is. Let me try to get to some of these questions. I've got Daphne Liu. Hi, Ryan. This is cool. I finally caught the live stream. It's really cool. Waiting for crypto to completely and utterly bottom out. Then I'll buy the GBTC. That's probably the index fund that they're coming out with. Is that correct? So I've got 3D dropping a ticker symbol, and I think that's an index fund, if I'm not mistaken. Correct me if I'm wrong. But yeah, I mean, if you guys are interested in cryptocurrency, I just be careful, man. Just keep it at 5%. Jesus Christ, for you guys that are just ripping away, wanting to put mega dollars into this, man, you're braver than I am. I will not play ball. I don't even think 5% of my portfolio. I have no desire. I would rather buy MJ. I'd rather buy Kronos and you know, some of those companies. If you really want to speculate on something, at least it's real. You know, blockchain technology is real. So is cryptocurrency. Don't get me wrong, but I think you're so much in the infant stages of the evolution of cryptocurrency that what's your motivation to play ball now? If it's to get rich, that may or may not happen, but that's typically not a very good goal when you're approaching an investable subsector like cryptocurrency. You want to know how I invest in cryptocurrency? IBM. IBM is the best technology buy right now, and nobody's talking about it. You guys want to buy a long-term holding in your portfolio? Pick up IBM right now. You bet. You bet. Great pick. So I was almost at 100. Now people are exiting. I don't know if it's the folks that can't stick around for the 2 hours that I throw down on a Friday evening in this live stream, but I just can't help myself, man. I just have a great time with you guys. So scrolling down through here, man, I've got the Travolta from Germany. It's really cool to have you on there, man. I've flown into Ramstein and flown into Germany. Most of the times I go to Europe, actually. It's a beautiful country, man. Very cool. How's Germany still allowing the chancellor to, oh yeah, it's giving you some, yeah, well, that's the reality around the world, man. We've got a pretty big decision next week with Brexit, so just keep your eyes peeled on that. I don't have an opinion on what that's going to do to the stock market. I don't think they're going to be allowed to leave. That's what I think. I think Theresa May is going to get shut down. I don't think that's going to happen. So it was very, very close of a vote the first time, but we'll see what happens to the stock market. I don't know if it's going to be a net positive or a net negative. Honestly, just with the volatility, anything that sneezes at this stock market affects it to the downside. So we'll see what happens next week when that actually shakes loose a little bit. So definitely have Ernest here in the group. Any input about which broker to use for a solo 401k? I will leave that to Ernest for sure, or Brent. I think picked that question up for action. Typically 401k is sponsored by the employer, but if there's a solo 401k, I have not researched that option. You know, I'd throw Vanguard out there, but that would just be a wild guess. And I certainly don't want to do that when we're talking about finances. I'd like to know for sure, but I have looked at Vanguard 401ks that are actually sponsored by the employer, and their fees, just like any of their other accounts, are very low. So if you're not going to have a choice in the matter, I typically like to see, you know, some of the major brokerage houses that offer that. You know, Fidelity has been some of the good ones. Vanguard has been another one of the good ones as well. Typically no real reason to stray too far away from Vanguard. I mean, they're in the top 90th percentile for cost compared to similar products on the market. So, you know, why stray too far away from the best in the market, in my opinion? And then I've seen some 401ks that are absolutely crazy. I think paying, you know, 1.5 basis points to partake in some of the funds and some of the 401ks. You're not the one making the money, guys. You're not. It's the 60% piece. that's just chewing you up, and they don't care about the stock market going down 800 points in a day. They're going to make their 3% off of, their trillions of dollars of assets under management. They could care less about paying you your year-over-year return, because you're probably not going in and checking the cost basis of your accounts, just like everybody else. Just like I was naive on that for a long, long time, going on there and checking the cost basis within your account and finding out that you're actually not making 11% year-over-year return. You're actually making 7%, and when it all comes out in the wash, I think a lot of people are just really surprised that even in an up year, a mutual fund that's supposed to turn back, a year-over-year performance of 10, 11, 12% is actually turning back, 6 or 7%. It's crazy. If you think I'm wrong, check your statement. So, and get back to some of these questions here, man. Are you doing a Roth IRA? Very good, Brent. Thank you for answering the questions in the group. I have done a Roth. Looking forward to getting some input and knowledge for an undecided stock market. Yeah, I did earmark that, just the undecided piece. And you have to understand, don't approach the stock market in that you have to be reactive. This model right here that I paint for you guys, in saying, take a quarter of your money and expose it to the stock market, that's so much different of a perspective than sitting on the sideline and trying to say, gosh, is the market going to go up? And then it'll start to go up, and then you make your leap of faith and boom, it goes down. If you end up doing that and trying to play the tape, you're going to be disappointed. This stock market is doing nothing but disappointing, and it's not giving you a whole lot of place to hide. And Tesla is not that place to hide. Okay. So I'm just going to tell you right now, if you're invested in the stock market right now, you're probably suffering a little bit in your portfolio. I say that, with a grain of salt. I really do. I could care less. I'm more excited about the changes that I'm making in the portfolio with regard to some of the spider ETFs that I'm getting to work on this 50% stock piece, which is really the kind of the backbone of my portfolio. And we'll kind of get into some of that stuff. I'll go over the percentages with you guys and let you know. I'll let you know right now, actually. We're not doing anything. It's just a Friday evening. So I've got the percentages up on the board here. If you guys can see them, it's just, I just scribbled them up there. But the fixed portion of the portfolio at 10%, I got about 21 grand in the fixed portion of the portfolio. And I will offer the ticker symbols to you now. If you have a pen and a paper, great. I could probably just throw them into the chat here. But you guys will recognize these if you hop on the Vanguard. These are all Vanguard products. One total bond market ETF, which is BND, ticker symbol BND. And then I've got some other offerings from the short, long, and intermediate term, BLV from the long side. And I tried to split it between corporate and U.S. Treasuries, okay? The other ones are VCIT on the intermediate side, BSV on the short side, and then VCSH on the short side. So 5 ETF holdings make up 10% of my fixed equities arm in my portfolio. And I just gave you all the picks that I have. And there was a time there when the stock market just before the last couple months, the stock market was actually pretty much on fire. And I kind of bought them, and I always wanted to have a start in fixed equities. As I start to get older, I'd like to transition and be at about 40 to 50% when I reach 50. That's just kind of an arbitrary figure. But right now I've got 10%, 21,000 in fixed. And right now fixed is actually starting to perform quite well. So maybe start to get some appreciation there, where I thought, geez Louise, I might have made a mistake by entering into fixed, where the long-term yields and the short-term yields were actually closing in on each other and actually becoming one and the same. And that's why my long-term ETFs actually took a little bit of a haircut when I bought them, but I don't worry about them. They're very safe. And so for my older investors that I'm working with as well, if you're in the 50s and 60s and 70s, I always look at it from the same perspective, in that if you've got cash to invest, make sure that at least 50% of the cash that you have is going to start in an ETF portfolio. So just kind of a cool way to approach the stock market. And this is the hard stuff. This is the hard stuff. A lot of people know that they either want to invest in stock, ETF, or fixed. And the fixed is through ETF anyway. That's just how I do it. I know Ernest has dropped some actual direct bond marketplace in the Facebook group. Really, really cool. I checked it out. If you had the fortitude to go on there and just buy your bonds directly, he offered the spot to do it. I just thought it was kind of an easier way of doing it, just buying an ETF that covered that specific offering, whether it be a short bond or a US Treasury on the short, intermediate, and long-term perspective. And I'm really just trying to cover all my bases. And that's how I got my exposure. So, for the older folks that are out there that are looking to get involved in the stock market, go ahead and take some fixed equities. If the stock market ends up really getting cranky, the bonds are going to be what outperforms. That's just how that inverse relationship has always worked over time. And even in an aggressive portfolio, there is a small amount of bond exposure that's recommended. So I'm happy to own it. So right now we're at about 10% there. So I'm going to get to some more of these questions, and then I'll jump back to the portfolio review for you guys. Just kind of talk to you guys about what I got. I have some income from 1099. I think you and Brent are talking there. I got Doug Whitaker in the line here, man. It's great to see you. Thanks for all the support of the channel, man. When I click over to 10,000, I want you guys to enjoy it with me. So definitely this is all about you guys as well. The SEP 401k is good if you've already maxed the Roth. So that's a very good explanation that Brent offered from the financial investor about the SEP 401k. Certainly not for everybody. I do have it mentioned up here. It's about 2% of my total overall portfolio holdings. That's where the YouTube earnings siphon to. I don't use any of that money. I just transfer every dime that I get paid from Google. And once a month, that rolls into the SEP IRA, and that way I can defer the taxes till later on in life. That's just what I want to do. And until I'm making $55,000 a year on YouTube, that's exactly where that money's going to go. I just thought it was about as creative a thing to do as any, to go ahead and defer the taxes if I'm contributing to a SEP IRA. So that's my idea. If you guys have the same idea, go start a YouTube channel and do the same thing, man. You might end up earning some passive income as a little side hustle down the line. And that's another thing that I've never really looked at my channel and said, wow, I'm a successful YouTube channel. Now, I don't mean that to be negative. I think there's a ton of success with the relationship that we've built up with the community. I really do. And that's all genuine. It really is. But as far as me knowing the ins and outs and behind the scenes and how to do, the right tags, Scribner's walked me through a couple lessons to just kind of tell me what maybe I'm doing wrong. And I've asked him, like, what am I doing wrong, man? And he comes back and he's like, man, Ryan, you're not doing anything wrong. You're doing fine. Everybody builds their channel differently, but I may look to come out with some YouTube videos on how to build a channel. Maybe when we get up to, a little more, maybe 25,000 subscribers. I don't know. I don't know if that's something that somebody would even look at, because I honestly look at my channel and I don't think there's a lot of thrills and spills. And, I'm not driving around a Ferrari. I'm sitting in my living room offering some advice about, what people can do to enter the stock market. And at the end of the day, I think that's what a lot of people want, honestly, or at least I feel like there's a lot of people. There's also a lot of people who tune into YouTube just for entertainment purposes only. And that's fine too. But for the audience that turns into the independent investor channel, I'm very, very aggressive at providing these little tidbits of value for you guys. So it can get your attention and you can be like, wow, I just saw the double circles. I've never seen it explained that way. And I've never seen it explained that way either, but this is what makes sense to me. If you have two circles and your exposure is overlapping your first one, then you're 100% exposed to the stock market. And what people really don't understand is that they save up that first $1,000 only to take it and just subject that whole thing to the stock market. And I think there's a more strategic way of thinking about your approach in just a different way. That's all. And it'll help you not get burned. All right. Always err on the side of defense. You've got the rest of your life to invest. There's no reason to just jump in to get burned and then have to recover. Okay. That's what we're trying to avoid for everybody. All right. Now, everybody that's invested, there's not one person probably in this community tonight, except for maybe, I don't know, the cryptocurrency investor. I don't know, that's making killer money right now. Because like I said, if you're invested in the stock market right now, portfolios are adjusting back. Okay. You're probably not making a whole heck of a lot of money right now. But if you're a new investor, it doesn't mean that this needs to discourage you from getting involved in the stock market. This right here allows you to do just that. All right. Hey, Ryan and group, I've got K. Lorenz 78 in the group. Good evening to you. Very cool. It's awesome to have you. 1979 Wood, one of the loyal subscribers of the Independent Investor channel. I'm excited about 6,000 contributions in 2019. So just so you know, another one of those tidbits of information, if you listen really, really hard, that take away, if you haven't contributed for this year, you can still contribute all the way up until the tax deadline of 2019 for your previous year. So there's going to be an overlap of a few months between January and April to where you can actually contribute probably more than 6,000, depending on what you've contributed for 2018. Okay, so just keep that in mind. I've been maxed out since January 1 of 2018 for 2018 contributions. So I have to wait until January 1 of next year to do my next 12,000 to the retirement accounts. So thank you for offering that. I just got learned up on that. I just heard that within the last couple weeks. I think it might have been 1979 that helped me on that one, keeping me honest. So very cool. We might hit 100. I don't know. It's fluctuating. I think maybe somebody is joining the group and jumping out and joining the group and then jumping out again. That's probably what's going to happen when I approach 10,000 subscribers. I'll probably get up to like 99.99 and then go back to 9,900 or something like that. We'll see what happens. That's okay. I've already given my piece about how arbitrary I think that number is and where I put the real value on the channel anyway. So it doesn't really matter. Reminds me of Pong the game. Yes, I think you're talking about the stock market, hopefully. So Doug Whitaker, so you're getting used to this red. I've been through this a million times before, man. Every single day I'm an investor. For the last 25 years in some form or fashion, I've been an investor and I've made it out of it just fine. I'm such a happy person, man. I really am. The stock market going down, especially in one day or a couple months, whatever, that's not going to change my perspective. You guys got to understand, I've got way more things on my mind than what the day-to-day operations in the stock market are. And furthermore, if that's what you're thinking about all the time, I would highly encourage you to reevaluate your tolerance to the stock market, because I find this all the time. I find that the stock market owns a lot of people. And it's just, those folks, it might not be for you, or they may have not had the opportunity to hear my explanation about how you can enter the stock market and kind of save yourself a little bit of mental anguish. It's just money. I have a different perspective. When I did my Forms of Money video, which is one of the least popular videos, it's really one of my favorite videos that I've done, where I started with a $100 bill. And I wasn't trying to be anything other than explanatory in looking at forms of money in 10% fixed, part of my money in accessible cash, part of my money in a stock portfolio, part of my money in a passive portfolio, part of my money in a SEP IRA, part of my money in a first trade account, part of my money in a YouTube channel, a small business, Do you see all those different forms of money that I just addressed for you guys? Right? Ask yourself, how many forms of money do you have? If I opened up my wallet right now, you guys would be surprised to know that I have zero cash in there. You want to know why? Because I don't find any value in that. There's no value. I don't care. If you put $100 in my wallet, I would probably spend through it in 6 months. Seriously. Because I just don't have any value for having that accessible cash. I would rather have that money in a different form working for me. And the whole idea of building personal wealth is to make sure that you're putting every single dollar that you earn to work for yourself. Get used to not having it at your fingertips. Taking on different forms of money. It's a psychological lesson that if you get right, you'll be so much more powerful. And I'm not talking about putting your forms of money into a new truck for $75,000. I'm not saying that. It's relative to make sure that the forms that you're asking your money to take on are those appreciating assets. And there's not that many in life to earmark out there to really kind of put your money to work for you. And this really becomes kind of snowballing after a while, in that, you know, I came out with the Spider ETF video, and a lot of those purchases, guys, were done with liquidated cash. I didn't come out of my pocket to buy those Spider ETFs, you know? So it's all kind of playing with house money. I say that kind of all the time, and that's what you're building up to do. And you know, I remember when I met my first $10,000 goal. That's why I came out with that video, so people could watch it and go, wow, I can do that. You know, that's really cool. I can do that too. You know, Ryan's talking about in 3 years or less, if I just contribute to it, assuming maybe that I'm going to get a nice rate of return of 7 to 10%. You know, that's why I offer all those ETFs off of Vanguard. Look at their year-over-year rates of return since 2004. That ensures that it takes you through one of the severe downturns of 2009, and the average year-over-year is still 10%, right? So you just invest in it and let it ride. It's amazing. But for you guys to look at that stuff and say, wow, I can do it, you know, that's the spark that we're looking to ignite in people, to really empower people, because there's such a disconnect between the haves and the have-nots in this country. And I earmark myself as a have-not, okay? I don't come from any type of money, any type of benefit was bestowed upon me. No way. I've earned it all. And I think anybody can do it. I really do. I think for anybody out there who's watching the message and say, wow, this guy can do it, I can do it better. I'm here to tell you, you can. You can do it better than me. Try to avoid some of the mistakes that I've made. Keep in mind, I've only been self-directed investing for the last 7 or 8 years, right? Imagine doing it for 40 years. Right? I've been doing it 7 years. I've made every mistake in the book. Been with 4 different brokerage accounts, houses. Thrivent Financial, Citigroup, Smith Barney at the time, Edward Jones, and there was one other as well in there. I've been with 4. And I could have done away with all of them. Edward Jones, if I didn't say that. But self-directed investing, man, the greatest thing that's ever happened to me as far as the financial side of the house. And we're looking to just empower and share that message with others out there. I hope you resonate with this right here. If I'm not explaining it right, tune into Tony Robbins, because he's the one who I heard it from. And I've just been conveniently borrowing it because it's legit. It's so legit. And where it really opens your eyes is where you put on the compounding calculator, but you put that 3% in there, and it'll show you the difference between if you have a low fee or a no fee account. Let's say you invest in just the VOO and you compare a 0.04% expense, and then you compare the exact same account, same year over year return with a 3% annual fee. The results are going to be staggering. Okay. And for you guys that are new and have never tried that before, you probably won't sleep. It's that powerful. It's the biggest secret that nobody talks about. It's really amazing. And we might hit 100 tonight. If I hit 100, I might try a somersault. And I'd probably break my neck too. So I would probably be in a neck brace. Up there, it's going down, man. Again, I'd probably be in a neck brace for my 10,000 subscriber video. That'd be terrible. It's really cool to have you guys in the group tonight, man. I'm going to continue to get to some more of these questions, and then I'm going to address the rest of the well, I owe you a portfolio. Right now, let's jump over to stocks. So stock, right now, 50% of the portfolio is in stock. I'm going to do another portfolio review. I obviously can't do a complete review of all the stock that I own right now. So I just took a position in VYM this week in the SEP IRA. I took a position in First Trade for the VB, for the Vanguard small cap. I took 4 positions in the SPDR ETFs, industrials, financials, healthcare, and communication services. So those are the 4 that I added, and I do have plans on adding financials, staples, and discretionary. I'm going to add all of them. The only ones I'm not going to add are materials and energy. Okay, and I think I talked about that on the video. I already own the utilities ETF, which is just performing beautifully. I really, really love the difference. It's amazing when you notice how stocks perform in a portfolio. Then you watch how those ETFs perform, and I can tell that they just perform with more diversification. They give me that comfort to know that you either win or you lose with single stock. ETF investing gives you so much margin for error. It's amazing. And for new investors, new investors, honestly, up to their first 10,000 should be going with a total market index or the S&P 500. If you're a young investor and you've got a tolerance, 3 to 5, something like that, just buy the S&P 500. You'll be fine. There's plenty, SPY, the IVV, the VOO. There's plenty of products out there that can give you that awesome exposure to the S&P 500. But once you get up to that $10,000 mark, which you will, then you can kind of start to look to maybe stray off a little bit and say, you know what, I'd like to start to build some of those sector SPDR ETFs like Ryan's talking about. But stocks at 50% of my portfolio, about 146K right now in the 50% of the offerings. Right now I'm trying to just hold tight. I think Google, Facebook, right here, I think Amazon, they're all buys, all of them. I do. And I know I'm going to get egg on the face. And if I had said that 4 months ago, I wouldn't have had anybody disagree with me. Nobody. They would have said, yep, you're right, Ryan. You're right. But why is it different 3 months ago than it is now? The stocks are cheaper. Look at Facebook. Historically never traded at a valuation this. I think it's below 20 right now. $9 billion share buyback announced this evening. Think I'm wrong? Come check me in 6 months on Facebook and we'll see where it is. As opposed to 137, we're going to see it above 200 again. Watch. All right. There's not a lot of pockets of year over year growth of 24% in the company. Facebook is a money making machine. And if you want to talk about a stock that really isn't levered to what's going on in China or what's going on with a potential downturn in the stock market, Facebook's going to make money no matter what. So I'm happy. I think I've got 90 shares of Facebook right now. I'm stoked to own the position. I really am. There's no way I'm going to call myself an investor and not want to own Google and Facebook specifically. Amazon and Netflix are a little different animal. NVIDIA, not so much. The chips are just getting killed right now. And I've got other chip exposure as well. I have a big position in Intel, which I'm totally fine with it. Use your opportunity to pick up a cornerstone like Cisco right here. How about that? So there's some pockets of opportunity there, but stocks right now at 50%. That's how I'm kind of scaling and dealing with, the volatility and building my portfolio to be just a little bit safer. All right, let's get to some more questions here. Having a great time tonight, man. Awesome. I hope you guys are having fun. Jesus, I don't know, man. If you hit the thumbs up button and show me that you're having a good time, this is a really one-sided conversation, honestly, and I try to engage as much as I can with the group, but I'm talking to my Apple computer right now, and it doesn't talk back. They need to come out with this live chat where I can actually speak with people. Now, that's going to be awesome. That's going to be awesome, and they will someday. Another reason to own Google is YouTube. So there the thumbs up come up, man. Awesome. Thank you for the support, guys. I really love it, man. I love you guys to death. I try to I just give you everything I got, to explain this crap. You watch the news media during the day and it's just like, oh my God, if you were a new investor and you looked at that stuff and you were just like, oh my God, I have no idea what to do. It's almost built to do that to you, It's meant to play off of your emotion. And it's so cool that you guys can come in here and hear some just real talk. I mean, this is real. These percentages that I'm giving you, they're real. And I'm here to tell you that it's really just not that bad in my portfolio. The stock piece was, the stock value has adjusted back about $6,000 over the last couple days. I was just at 200, and don't pay any attention to these percentages, but just to give you some relative perspective, I just dipped above 200 grand just a little bit on, I think it was around Tuesday or something. Went up really big on Monday with the announcement, right? The Xi and the Trump thing, right? The love affair that they had over dinner. Then the market spiked up and then it went in the toilet the next couple days, right? So I went from 200 all the way down to 193, back up above 195. So I was $1,000 swings 3 times this week. So ask yourself, do I want to be a stock investor? I don't know. Maybe I need to have my head examined. I don't know. But honestly, if you guys can if I told you to freak out right now, I just wouldn't be giving you an honest perspective of how I actually feel. And I'm just not feeling anything. I don't fret this stuff. I don't. And I want that type of perseverance and fortitude for you guys when you're mulling through this stuff. I don't want you to overexpose and get burned, because it's really hard to look at your portfolio when you're a new investor and it's capital that you come out of pocket with, but you guys have to understand, I've rode the downturn of 2009, and I was all the better for it. A lot of profit that came from 2009 in my portfolio has come over the last 10 years. You know what I'm saying? So some of these maneuvers that I'm making within the portfolio aren't with money that I'm taking from my wallet. Like I said, I wouldn't be able to take money from my wallet anyway, but you guys know what I'm saying, just by reallocating some funds in the portfolio, liquidating some larger positions, all the stock that I sold this week, I was up in, liquidated back, still held a few positions, positions that I probably own from appreciation and not necessarily from real money that I've come out of pocket with. And that's what I want for you guys. I really do. Stay disciplined, stay true to your program, man, and pay yourself first. That's what it's all about, no doubt. So let me try to get back. Anyone bought Apple today? I know Scribner took a position and he's being opportunistic. He's young. He should own Apple the rest of his life, honestly. Great company. I'm not buying Apple right now. I think IBM is a better buy than Apple. And I can't believe I'm saying that. Holy moly. But I'm more excited to own Apple right now. There was an analogy today that came out that said that the cell phone market is becoming saturated. And I'm just not really sure if I buy that argument. I mean, is the car market being saturated because everybody in the world drives a car? I don't think India is saturated with iPhones. I don't believe China is saturated with iPhones. I think there's 4 billion people probably on this earth, or 4 trillion people on this earth that have smartphones. What about the other 6 trillion? I mean, I don't know. I just think that the ecosystem with Apple is not, they don't deserve to be minimized in that manner. They're getting crushed just like the rest of the market. But if you were ever in a position to add Apple to your portfolio, I would be patient. I would continue to monitor it, add it to your watch list, right? Just be kind of careful buying stock right now, okay? That you've got the luxury of holding, all right? Sit back, watch the show. If there's something that you'd ever wanted to buy, you might be getting your opportunity over the next, few months to 6 months. If you wanted to buy Apple next week, you'd probably be fine. Anytime you buy a stock now during volatility, just be ready to go long the stock in case it does continue south on you, or give yourself the ability to buy more of it. And again, for you guys that are with First Trade, buy a stock at a time. Who cares? They're not charging you a dime for it. Buy it here, one share, monitor it, buy another one if it goes down $10 or $5, whatever it is, kind of scale into your position. So kind of cool stuff. I'm sure they're running out of Pepto-Bismol on Wall Street. Yeah, those guys are pressed really to perform, and I don't know if I can do that. The stock market is a very, very humbling place. I've said that from the beginning. If you don't believe me, go back and watch the catalog of my old videos. I've said this many, many times, and that's really what I saw when I was on YouTube, and not a lot's changed. Not a lot's changed. Everybody's just trying to just get people to act crazy about the stock market. And it just doesn't have any place. You'll end up screwing up by doing that. It just is not the right way to approach the stock market. You have to approach it carefully, free of emotion. You should participate in the stock market, but you should participate for all the right reasons, and you should understand something about what you're trying to achieve in the stock market. Understand that if you're a self-directed investor, you're playing on 100% of the total overall potential. You don't have somebody in the middle consuming 3% of your money as it's trying to grow, or as it's adjusting back, they're still taking their 3%. All right? Independent Investor Channel doesn't play by that. Our community doesn't play by those rules. We don't. We invest on our own. That's why I always recommend going more defensive, because you're already in a winning program. All I have to do is recommend good passive assets and the right account for you, which is why I'm so excited about always offering. If you guys are into M1, I'm all about it. I don't care, because over time, those accounts will win for you over time. As long as you're not paying the major brokerage houses, I'm happy for you. And you should be happy for you, knowing that you're in the right account, and your account is actively, it has the benefits of the retirement account, but you're able to actively invest in that without the $5 to $7, entry and exit fees. That's big. You guys don't understand how big it is. Many of you guys are trading in your account or investing free of charge. That type of stuff just did not exist. And in my Merrill Edge account, which is a major full service broker, it still doesn't exist unless you reach those threshold limits that I talk about. So a lot of people that I was recommending the account to, they were saying, good grief, Ryan, I've got to get up to $50,000 before I get a free trade. What's up with that? Now we don't have to settle for that type of activity. And I think a lot of the brokerage houses are waking up to this. And eventually, I think they're probably all going to go to zero anyway, because I don't think that's where they make the money anyway. I really don't. I think they're just piecemealing, accounts away. And I think it's frivolous. They don't need to do it, but they do. So go elsewhere. If we can provide those solutions to investors, man, that's what we're all about. And I'm excited as hell. I love the platform. I think it's fantastic. That being First Trade. I love the data access. I love how simple it is to use. I placed a trade on the platform to buy. I bought 2 shares of VB yesterday, and I bought 1 share today. It executed immediately. Love it. That's what I demand from my broker. When I put an on-demand trade in there, I expect that it settles within a few seconds, and that's exactly what happened. Free of charge. Love it. Couldn't ask for anything better. It's awesome. Let me try to get to some of these questions over here. Greetings from Japan. That is awesome, man. Very cool. It's great to have you in the group here, man. Greetings from the East Coast of the United States. I would say Virginia, but I don't know if you'd know much about Virginia. I don't, and I live here. So Everybody knew New York City, so I can't say that anymore. That was kind of a staple of the channel. I kind of miss New York City, man. It was a cool place. Like Ryan states, keep a good chuck of cash on the side for times like this. I think you should have a good chuck of cash on the side all the time. Honestly, this is just one of those differences between going into a financial planner and saying, I have $10,000 cash I want to invest. No financial planner is going to tell you to take half of that money and put it away. They're not. They freaking get paid on bringing as much money into the house. Now, does that have your best interest in mind? I don't know. What do you have to say about it? You know, you want to be a self-directed investor in this market? Put $8,000 in the bank and take $2,000 and invest in the stock market. You know, you have that option. Make this circle really, really small. You know, make that cash pie really, really big. So when the market does go back 30 or 40%, you're sitting on a fat wad of cash, or like Michael's talking about, a chuck of cash, you know, so you can strategically buy into the stock market. That's one thing I didn't talk about in my chart here is everybody wants to talk about these dips. I take advantage of those dips. I strategically buy these dips. This best fit line is representative of a dollar cost average program where you're just putting money into the stock market pretty much randomly on the same day every month going through that's dollar cost averaging in a nutshell. $25 goes into the account on the 15th of every month. That's dollar cost averaging. I don't do that. I strategically buy the market, and the farther down it goes, the more hungry I am to actually buy stock. Again, maybe I need my head examined, but over time, I have done nothing but buy the stock market on red days. Doug Whitaker said, hey, are you tired of seeing red days? No, I'm not. That's my opportunity to buy. And if I can do that for my entire life, think about how many opportunities that I've had to just pay attention to the stock market and say, wow, I don't know squat about the stock market, but it's down 500 points. Maybe I should throw $50 at it. Anybody has the ability to do that. Anybody. Dollar cost averaging is really just a sleepy way of ensuring that you're contributing to the stock market on a regular schedule. Strategic buying just requires you to pay a little bit more attention. And on a day like today, instead of being a YouTube creator and coming out with a video that the stock market is down 800 points, maybe just sit back for a second, pull your head out of your behind, and maybe look to strategically buy the stock market. How about that for a topic for a video, right? Oh my goodness. I mean, just use your head a little bit, all right? You know, I won't go off on my tangent, but I will do this. I will offer that I've got right now, the passive piece to my portfolio, which is here, is about 24% of the portfolio. Now, this is the employer-sponsored piece, where I've got my TSP. For a lot of you guys, it's going to be the equivalent to the 401k. So for a lot of you guys that are employed, you guys can kind of understand that this is just a branch of my total overall portfolio. So we've got about 24,000 in that account. I do about 10% of my pay to that account every single month. And that goes in there. That's true dollar cost averaging. I don't strategically buy that account. But I've got 24,000 in there, right? So that's an amount in that account that relative to the total overall whole, I'm not panicking. And that is legitimately my passive account. That account I do not screw with. I keep it on a 70-20-10 split in the TSP. For my military folks, they'll understand, or my government workers who have the opportunity to grab the TSP. The 401k is somewhat similar in that you probably have an offering in your 401k that you can get exposure to the S&P 500, a small cap fund, and an international fund. That's what I have. 3 index funds, very low cost. Each of them is 0.03. So it's actually cheaper than Vanguard to own these TSP products. That they're not gangbusters, but they've performed very well over time. And that's 24% of the total overall, just 24,000. So if I looked at this portfolio, or you guys could sit back and say, wow, if this was my portfolio, where would I look at as an area to improve? That's an area where we can improve, right? If the stock market ends up going down 50% and that 24,000 ends up turning into 12,000, what have I lost compared to the total overall portfolio, right? Not too much. What would I do at that point? I'd probably take 12,000 out of my cash and I'd just backfill it in there. Strategic buying, right? Can you see where I've given myself the opportunity to do just that? Am I protected to the downside? Yeah, 100 grand cash, right? And that's the cash piece to the portfolio. Now you guys will add this up here. The total overall investable cash here is about 200 grand. And then the 100 grand in cash is in addition to this. Okay, so that's why the percentages don't match up. But about 30% of the total overall assets are in cash right now at 100 grand. The rest of the 200 grand are split between the fixed, the stock, the passive, and these two baby accounts over here that I just actually started. I had the idea to roll the YouTube earnings into the SEP IRA. That's 2%. And then the first trade account, I've got dyslexia. I've got it backwards there, but 3% in the first trade account there, because you guys know I transferred over $2,500 to that account. So that's it. That's what I was telling you guys. Thought it would be cool to give you guys that transparency. And now I'll come out with videos on the specifics. I know you guys would be interested in the stock piece to the portfolio, but I'm not panicking. I'm good. It's just money. It's money that is in different forms. And if you guys kind of take away this explanation, understand how many forms of money I've got here. Furthermore, understand this key principle in that how much of this is tax protected, okay? And how much fees am I paying over this money? I wouldn't be lying if I told you this. My banking institutions are paying me. And that's a big trick, man. What side of the coin are you guys on? Are you guys paying? Or, for most of you guys that have been with the channel for quite some time, you get it. Like, I'm not wrong. I'm right. It's just the right way to invest and approach investing. But I know there's folks out there that you guys know that wouldn't give you the time of day to have this explanation put forward to them because they're friends with their financial planner, and they get to go sit down with them once every 6 months or once a year, maybe once a quarter if they're really special. Maybe they've got a $500,000 portfolio like I've got. We're approaching. Where would I fall in the pecking order if I went into a financial planner? Would they give me 2 meetings a year? I don't know. You guys get a meeting once a week with me on the Independent Investor channel, man. You don't have to pay a dime for it. And I don't know, maybe there is some $500,000, $1 million portfolios in the group. I wouldn't be surprised. I wouldn't be, because this information's for everybody. It's legit. Try to take $1 million portfolio into a financial planner and see how far you get. They're going to want it all. We're going to want it all. So the information is certainly relative to all people, man. I got to get back to some questions. It's just really cool. There's even a pre-show. Never know that. Yeah, I just turn on the computer, man, and just start talking to everybody just because I really do truly enjoy it. Hopefully you guys sense that. I really, really enjoy the live feed. I really do. And that's in line. I know 1979 hit me up and was asking me about my opportunity. I can't really disclose that. It's still kind of in the works. And they are still making a decision based on that opportunity. I've told them I'm down. They want me to go change lives. That's exactly what I'll do. That's what I do. I will have no problem doing that. I will be one fired up fella at the end of that day, because I'll be the one doing all the presenting. But it's just a killer opportunity, and it's come to me through the channel. I would have never had this opportunity had I not had the channel to put my message out there and share it with people. And this particular individual saw it and was like, man, this guy's legit. And I am. I'm not a certified financial planner, I'll tell you that, but I can tell you this: what makes a person legit in life is not a piece of paper. I'll tell you that. I value experience. I value hard work. I value honesty. And I value someone who seemingly has a lot of answers, that has the time to stop and go and help somebody that may not have those answers. Because I can tell you, when I was 20 years old, I did not have those answers. And I would have killed for this information. If somebody would have just helped me and said, hey, you need to look at this and here's why, you know? And hopefully that's what I'm doing for folks when they come onto the Independent Investor channel, is providing that referral. That's what I mean when I say that all the time. Greetings from Jan. If anyone says they're making money on stocks, needs some slap. Yeah, I'm not making money. Wouldn't that be something, man? I know there's folks, man, that get on YouTube. I don't know. Look, if they can get on there and make money in a volatile stock market, that's fantastic. I know there's probably some options traders right now, you know, through put trading, that's probably doing just fine right now. But yeah, there's not a lot of place to hide right now, and it gets misconstrued what success is on YouTube with regard to finances. And I know I'm hard on some of the channel creators. I'm hard on them. Why? Because first of all, they don't care what I have to say. First of all, they don't care. Who am I, right? The judge of a man is the size of their YouTube channel as far as they're concerned, right? So I'm just a little fellow with 10,000 subscribers. I'm a nobody, right? It's indicative of the information that I provide, that I have such a YouTube channel that has 10,000 subscribers, that would give them the opportunity to say, you're just a little guy. This means nothing to me. What you're explaining means nothing to me, because I have a big channel, and therefore everything that I know is gospel. And therefore I don't have any ability to hear somebody out and listen to what they're saying, you know? And I think that's really, really poor. I think what comes through on YouTube, you know, all the time, driving around the fancy cars, right? All the creators do it except for me. And Scribner doesn't do it either, man. And I give him all the credit, because could he? Yeah, he could. He could. All right. And I almost think he should, honestly. I mean, give yourself a little bit of treat, because that guy freaking works hard. But I know him, and he doesn't think that way, you know, which is kind of cool. But man alive, if you think in your early 20s, just because you've made millions, or so it seems you've made millions, do you honestly need to go out and buy a Ferrari to drive around? I don't know. I guess I just have a more pathetic perspective on things. It's such a waste of money, you know? And I don't think that epitomizes success for a new investor. And it's very, very tempting. If you're 20 years old out there and you're watching a YouTube channel, and somebody your age is driving around a Lotus, you know, it's like, whoa, I want to do what that person does, you know? And I think that can be a very, very dangerous, slippery slope. And it's not a message that I want to put out. I mean, I tell you guys, I mean, the method to my success is the fact that I drive around a 13-year-old truck with 200,000 miles on it, and I'm proud of it. You know, it might not be as flashy on YouTube, but this right here, you know, a portfolio that does not reflect my income. You know, I make about the average income in the US. I work very, very hard, as a lot of people do across the world. Okay. And it's really relative to different countries and different perspectives out there. But I think there's a lot of transferability of the themes on the Independent Investor channel when we're talking about wealth building, right? Because it's just really not going to do you a whole lot of good to look at that and just think that you can consume YouTube every single day and take it like medicine, and somehow it's gonna make you successful, right? And that is why I'm very, very harsh on a lot of channels, because how usable is the information? That's my question. If the information is usable, so be it. Ask yourself, after you're done consuming a piece of content, Ask yourself, how usable was that information that I just sat back and watched, right? And I think you'd be amazed at the answers that you come up with. So going about an hour and 20 minutes now, guys. Thank you so much. I'm kind of getting to the end of the questions. This is cool because I've been able to hit every single question in the live chat tonight. This has just been very, very enjoyable for me. I do apologize for the scribbles on the board, but that's just how my mind works. Honestly, if you guys saw my notebooks, I mean, you guys would be amazed at how big of a dork I am in the stock market. And this is just, you know, the grind. This is just a playbook of how the grinder thinks. You know, I mean, seriously, I have a whole notepad full of just notes and stuff. It's just all notes, all notes. Yeah. Yeah. Just a page out of my playbook. That's all. Sometimes that's the type of stuff that it takes, you know, to put pen to paper to get some of these ideas out, you know, and really look at it like a game plan. So I'm going to make sure I hit all these questions here. Plan Africa, made money with Royal Dutch Shell. Yeah, Royal Dutch Shell's been getting creamed, but that's one of the reasons why I didn't enter into the sector spider ETF, the energy ETF, is because I'm very heavy on some of those higher names. The Chevron I did take some profit on, but Exxon I'm holding true on. Marathon Petroleum I believe in from a long-term perspective, and then Royal Dutch Shell, same thing. If I can own the biggest liquefied natural gas provider in the world, I'm all about it. Because liquefied natural gas is the wave of the future. That's what's happening, in my opinion. I didn't do anything with Royal Dutch Shell. Still down in those positions. The Spider ETF video this week was thumbs up. Thanks for putting it out. Miles, appreciate it, man. It's just a different offering, you know. And a lot of people think, oh my gosh, you know, I don't know the first place to start. And I want to simplify it for new investors and be like, look, you either have single stock, right? Big companies or small companies. If you're worried about single stock exposure, which there's reason to be worried if you haven't paid attention to the stock market this week, it's been volatile as hell. You know, if you can't handle the swings that I just explained to you that I went through this week, which I can handle it just fine. You know, I was down $3,000 today. You know, can you handle that? And I don't throw that out there to brag. I throw that out there to tell you that's reality. That's just the way it is. You know, but also to kind of prepare you to say, look, you know, Ryan's saying it's fine, you know, just because he took a downturn in the entire portfolio doesn't mean that there aren't segments of the portfolio that are performing well right now. So just kind of keep that in mind. That's the transparency piece, that if you can kind of hear it from me and understand that, hey, if I can do it, you can do it too. That's part of the inherent lesson, is to get your mind conditioned that, remember how I talked about all those different forms of money? They're all going to act different. And I tried to give you that little bit of idea behind looking at this fixed equities piece. And I'm like, wow, I'm so glad I did that. I knew it was the right thing to do. And now while all the stock market volatility is going on, this fixed portion of my portfolio, every single one of them go up every single day. And nobody talks about it, you know? Why? Because it's not Ferrari glamorous. So anyway, let me get down to some of these questions. 66 DeVille is in the line here. We all going to take this roller coaster and put your seatbelt on really, really tight. Yeah, the idea is to provide yourself a governor on your portfolio. I don't like to think about approaching the stock market like just, you know, putting all your eggs into the stock market and then doing one of these and shutting your eyes, you know, or your analogy is, you know, put your seatbelt on tight. I think you're right. I think there's going to be volatility in the stock market for the foreseeable future. I don't think that's avoidable. I don't. Unless something really shakes through. Brexit is the real alibi. I don't know what's going on with that, but the trade war with China is legit. It's legit. Thank you very much for the tip. I really appreciate that. That's really cool. It helps pay for the gas in my Ferrari. I appreciate that. That $4.99 tip, that's awesome. I really appreciate that stuff, man. That's very cool. Help support the channel, man. That's awesome. I thank you for that. I will drink to that. Green tea tonight. Thank you kindly. But my point, I think, is definitely I like that open dialogue when we're talking about, new investors. They come into the live stream every night and they're like, okay, what does Ryan think? What do I need to do to prepare? And I think that's very, very sound advice to say, buckle your safety belt, man. The volatility's here. If you've invested in the stock market over the last 10 years, you've learned really 50% of what the stock market has to deliver. And now you're finding out the other 50% of the stock market. This is pretty normal. I don't think the swings per se from day to day are that normal. I think once the volatility kind of subsides a little bit, I think we'll get a little bit more normalized, but we may not. With the machine trading and platforms like Betterment that, have everything locked in based on the algorithms and how they're built and set up to trade on certain technicals, they're all looking at the same technicals. So if all the machines are set up to trade the same way, that's a lot of the reason why some of that selling becomes exacerbated as some of those technical levels start to be met and broken, right? And that's where I think some of those down $600, $700, $800 days come from, because there's no real excuse for that to be happening other than that, right? The stock market's not that bad. Stock market's bad. The underlying economy is actually quite good. So we've got them going in opposite directions right now. They don't typically mirror each other, but right now that's kind of what's going on, is they don't reflect each other right now, in my opinion. Let me cruise down. I've got Mr. Bob Wright in the group here. It's as if I'm speaking directly to Bob right now. I always love talking to Bob, man. Very, very loyal subscriber in the group. I'm going to take just a moment and address his question. I sold my Apple twice and bought the dips. The market is bigger concern for me right now. I bought back at 169. I think you're fine there. And I like your opportunistic buying and channeling the stock. If you have the opportunity to do that on a good quality name, I will tell you that's what I do that. Okay. I can't help myself, because I can't tell you how many times I've taken a great stock up 20%, only to watch it come back and give half of it back again, or have it go all the way back and give it all back. Why not take some profits and then monitor the stock? Give yourself a chance to succeed. And it sounds like you're doing just that. Hopefully you sold at a profit, right? And you're able to enter back into the stock at 169. Now exercise your right. Now you're back to a stockholder again. I think that's smart. I'm all about that, man. Have a little fun with it too. All right. If you're making these stock trades and you can't sleep at night, don't do that. I want you to have fun with it. I enjoy the heck out of the stock market, and I want nothing more for you guys than to enjoy it for yourself as well. Being an investor has so many benefits. That's why I say everybody should do it. But just don't over lever yourself. I think you'll be fine. 169, that's really good. I sold half of my shares of Apple when it was up in the 220s. I sold half. I sold 20 shares. I still own 21 shares of the stock, around $3,500, and I'm long the shares. I just wanted to take some profit. I think I was up $800 or $900 at the time. So I ended up liquidating back 20, and I ended up being right on it. I could have ended up being wrong. It could have ended up continuing up. I just took a shot at it, and I ended up winning. I lose on some stock picks as well. I'm getting crushed right now on Dow DuPont. If you guys want a great stock pick right now, look at Dow DuPont. That triple split, they're splitting into 3 companies, trading at a valuation that is absolutely insane, and they are being forgotten right now in the stock market. There's a soft spot right there if you want to pick yourself up some materials in Dow DuPont. Dow DuPont is absolute cornerstone in a portfolio. $500 at 10 shares of Dow DuPont. That'll get it done for you, no doubt about it. I'm very tempted to actually add some more shares right here of Dow DuPont. And I've already offered IBM. I bought it at 130. I'm good. I didn't get the best entry. The best entry would have been 115. Right now at 120 IBM, it really looks attractive. Really looks attractive. So I like this guy. He seems legit. 66 DeVille, thank you so much. I don't seem legit. I am. I don't do YouTube for a living. It gives me a lot of credibility to come on here and offer my time to folks, especially, a Friday evening. I mean, my wife and kids are sleeping right now, and I do this for you guys. I look forward to it. But, when I'm in front of a channel, man, I'm taken away from my own personal time. One thing that you can, too legit to quit. Now you're talking my language, man, too. Fucking MC Hammer. That's funny. Shit, I'm 41. So I've been around a little bit. I've been investing for a long, long time. I've got 25 years. I learned the rule of 72 when I was 14 years old. I've always been into money and finances. I've probably made more mistakes than I have had successes, but this is what I have to show for it. And what this does is it gives me freaking credibility. And quite frankly, it should, because you don't get this overnight. You don't. The guys on YouTube that are driving around for Ferraris and Lotuses, they've seemingly got it overnight, and that's great. I'm all about it. The entrepreneurial spirit is alive and well. The unfortunate part for those kids, sometimes I feel like, is I hope they appreciate it. That's all I ask, right? And if you haven't been through the trenches like me, I'm talking finances, and right now I have another job during my day. I don't support my family with YouTube. I don't, okay? But something that makes me legit is the hard work that I've done. I don't think there's any harder line of work than commercial fishing. That's what I did for 8 years before I joined my affiliation with the military. And, what makes an individual legit? Does having 250,000 subscribers on YouTube make you legit? It doesn't. Sorry. Just here to deliver. It is my opinion, but I don't offer it thinking that I'm wrong. And does 10,000 subscribers make me any better of a man? No, it doesn't. Does the fact that 10,000 people hit the subscribe button on my channel make me a better investor? Nope, it doesn't. I do appreciate that, but yeah, I mean, if you're new to the channel, certainly there's a lot that I want a new investor to understand if they're coming into the channel first out. You know what I'm saying? I definitely want you guys to understand your level of access, and we provide those solutions. Certainly, finding the right account, finding the self-directed Roth. If you make less than 130 grand per year, you're eligible, right? So you want to start that first. Find an account that offers free trades. And I've got Brent in the group from the Financial Investor. He enjoys M1. I've got a lot of people in my community who enjoy M1. And I think really it just kind of comes down to aesthetics, to be honest with you. M1 does have a great benefit in the partial shares purchase program, which I know a lot of customers enjoy of M1. Scribner offers Webull. I'm not really that stoked about getting a free share of stock that I don't know what I'm getting. I love the first trade incentive in that if you refer somebody, you get $50 if they meet the eligibility criteria. And I just like how simple first trade is to use. It's more of an on-demand broker. That's just what I've been used to. So yeah, I do appreciate that, but I'll tell you what, man, I will go to bat for what I feel is legitimate. And there's a lot of illegitimacy on YouTube, man. It's a landscape full of a bunch of freaking garbage as far as I'm concerned, if you want to know my legitimate truth about it. So really cool to have you in the group, man. Thank you for that comment, man. Hart Miller, I need a life jacket. Been drowning in the Red Sea all week. Procter & Gamble has been my only savior. I liquidated Procter & Gamble today, actually. I've owned Procter for 5 years, and I've been trimming the position ever since it dipped all the way down into the low 70s. I bought big in the low 70s, and here I just went ahead and liquidated because I do have my thought process behind that, Hart, is to enter into the Staples Spider ETF, and that was my thought there. I'm really trying to diversify a little bit more of this 146K away from single stock exposure. I'm really excited about the prospect of diversifying my portfolio a little bit more by using that sector ETF. You talk about legit. I mean, I'm doing this stuff. I was sitting on my couch. I was doing my studying. I made the decision to do it. And I was like, okay, I'm going to throw down on a YouTube video. That's how I roll. Okay. And again, I don't put food on the table with YouTube. All right. Very cool. I'm going to start to wrap it up, guys. I've got part of my group is leaving. I didn't get to 100 people tonight. I'm a little bit disappointed. Now I'm only at 69 people in here, but I was up to like 87. I thought I was going to make it, but I just want to thank you guys. We may hit 10,000 this week. I don't know. Keep your eyes peeled. If you feel so inclined, come onto the channel and leave your comments. If I've impacted you, the greatest payment that I could ever get are those people that come on and say, Jesus, I would have never, ever thought to do this, man, if it wasn't for your message. And, you know, that's the biggest payment that I could ever get because, excuse me, let's be real. Without social media and without the power of YouTube, I would never have been able to provide the opportunity to reach so many people if it wasn't for YouTube. And for that, I'm very, very thankful in that I've been able to reach a lot of people, and not only in this country, but worldwide, hopefully. Hopefully you've been able to scale some of what we talk about in the lessons. Hopefully you've been able to, you know, maybe become part of the Facebook group and just kind of educate yourself up on thinking about how we enter into the stock market in the United States, maybe some of the mistakes we're making. I don't know. I just think that makes us stronger. And I hear a lot of cool perspectives from overseas, from a lot of the folks that tune in, man, from Norway, Japan, Eastern Europe. I've got in the group, Australia in the house, you know, some cool perspectives come through. And I just think it only makes us better as an investing community. So I'm going to make sure I got to all these questions here. Hart Miller, thanks for coming in. Too legit to quit. That's right. That is right. New Zealand is in the house. I got Terry Harris, New Zealand, #1 on my bucket list. That would be cool to make it down there someday. Watching from South Korea. That is awesome. Wow. When would you ever have the chance to meet up with somebody or just at least acknowledge that somebody's from South Korea? I've never been there in my life, but it's just cool to have you in the group. Keongtae Park, and I hope I pronounced your name correctly, but it's really cool. Webull has the best real-time charts, shows every tick, also good to watch all international marks, HSI, FTSE, etc. I use M1 though. Mike O, thank you for that. So those types of reviews go a long way with me. I just tack all three of them up into the high category because a lot of folks are looking for free trades. So Terry Harris says, come down. I might take you up on that. That's very cool. Out of Auckland? Yes. North Island? South Island? Where? Some of the coolest people I've ever met in my life have been from New Zealand, man. It's very cool. That's what makes the world go round, man, is all the good people in it looking to, you know, live a good life, live a better life, man. Maiko, really? Maybe you have too many indices or signals on the chart. Thanks, Ryan. Thanks, Kiwi Zealand. That's right. All the Kiwis, man. Love it. North Island. Wanaganui, if you can say it. If. Wanaganui. Did I get it? Wanaganui? Wanganui. No, very cool. Hey, with that, guys, I'm going to sign off, man. So keep your eyes peeled this week. Next week, you know, buckle your safety belt. Certainly a theme from the group tonight. I don't think it's that bad. I'm sorry. I hate to be the light, you know, in a what seemingly a sandstorm right now of information that's honestly, they tend to pile on when the stock market does this. And I honestly think it's our way of fighting back as individuals. MC Hammer could have used your financial advice. Nice, man. I love it. I love it. Guys, thank you so much for making this another successful live feed. This is live feed number 31. Funny enough, this is the first live chat that I've had where I've used the correct drop down. So I've actually seen all the questions that came through. For you guys that have come in here, you know, at least hit the thumbs up button if you haven't already. I guess it helps support the channel. I don't really do this for that reason. There's not a lot of people who do live streams, especially as frequently as myself. I know some of them do. I just enjoy the heck out of it. I really do. And if we're not turning back value to you guys, which hopefully you're able to kind of value from some of these insights. I've got thousands of them. So, we offer little tidbits every week, and we talk about, where the stock market's going, what moves we're making, what's available out there in way of strategies and portfolio building. But, hopefully we're reaching somebody every single week, man. If I'm reaching one person every single week, that is absolutely in line with the goals of the channel to empower folks. So keep your eyes open for the 10,000 subscribers. I look at maybe a week left to go before I'm able to post that and throw it out there as a gift back to you guys. It's really just a credits video. I thank a lot of people. The financial investor is one of them. So Brent, please make sure that you put your comments. I just can't thank you enough. I'll thank you right now personally. But I do thank you in the 10,000 video, and we should be there within the week, guys. With that, I am going to sign off, guys. We will catch you next week for the live stream from the East Coast of the United States. Thank you so much for tuning in tonight, guys, and I will check you guys next week. Thanks again.